we are starting Chapter 2, and we're going to be learning about T accounts. So in Chapter 1, we just talked about how transactions affected the accounting equation, and then we put them in that little table and showed how it affected the accounting equation. But that's actually not a very efficient process because, as y'all know, it took a long time to keep up with each transaction and then keeping a recording balance as we went along. And it just wasn't very organized. So T accounts help us organize our transactions in a more efficient way. So a T account is an accounting device used to analyze transactions. And at the very top of this, I'm going to write out the accounting equation. Assets equals, and make sure you put assets on the left side, and then liabilities plus owner's equity on the right side. Okay, so all of our assets are going to be on the left side of this T account because they're on the left side of the accounting equation. And then all of the liabilities and owner's equity go on the right side of the T account. So a debit is referred to as an amount recorded on the left side of an account. And a credit would be the amount recorded on the right side of an account. So whenever you hear the word debit, you automatically need to think of your assets or the left side of the accounting equation. And we abbreviate debit with the symbol DR. So over here under the left side, I'm going to write DR for debit. And then credit is abbreviated with CR. The side of the T accounts are also used to show increases and decreases in account balances. The increase side of each account can be associated with the accounting equation using two different rules. And these rules are found on page 33 of your textbook, if you want to turn to that now. So the first rule is assets are on the left side, therefore assets increase on the left side, or the debit side. And then liabilities and owner's equity are on the right side, so liabilities and owner's equity increase on the right side or credit side of the account. The side of the account that is increased is called the normal balance. So we'll go ahead and write that up here. Side of an account that is increased. So the increase side is always the same side as the normal balance. It's the exact same thing. Okay, so we're going to look at some different accounts and if they're on the left side or right side of the T account. So up here at the very top, I'm going to redraw this. Assets over here on the left equals liabilities plus owner's equity. So any asset is going to increase on the debit side and decrease as a credit. And then liabilities and owner's equity are opposite. So they're going to decrease as debits and increase as credits. So since assets are on the left side and they increase as debits, their normal balance is going to be a debit. And we abbreviate normal balance with the symbol NB. And then liabilities and owner's equity are the opposite. Since they're on the right side of the accounting equation, they're going to increase as credits. So liabilities and owner's equity normal balance is a credit. I went ahead and printed off the other page called Chart of Accounts. So if you have this, go ahead and glue it in your notes, but we're not actually going to go over it until tomorrow whenever we get to the lesson 2-2. So anyways, go ahead and glue it in, but we're just going to skip it for now and go ahead and get out your work together. Make sure you turn to page 35 in your textbook to follow along. So what we're going to do is create a T account for all of those accounts that they gave us. The first one is cash, and then accounts receivable. Doesn't really matter where you put these at, and I'm just going to abbreviate because I wrote way too big. So accounts receivable dash Sullivan Company. Supplies. Prepaid Insurance. Accounts payable dash Sawyer Supplies. And then another accounts payable dash Oceanside Supplies. And finally, Parker Bogle Capital. Alright, so we have done step 1, prepare a T account for all of these accounts. Now the second step is to label the debit and credit side. So we're going to write debit and credit on all of these. Whoops. And you could write debit, credit, or just do DRCR. Okay, this just gets you in the habit of knowing that debit's on the left, credit's on the right. Okay, so make sure you finish labeling all of the debit and credit sides. Now we're on step 3. Draw an up arrow on the increase side. And then step 4, draw a down arrow on the decrease side. And then we're going to label the normal balance. So let's start with the increase-decrease side. So we need to ask ourselves, what side of the accounting equation is this on? And I'm going to go ahead and write this back up here, the accounting equation. Assets equals liabilities plus owner's equity. I'm just going to abbreviate OE for owner's equity. And I'm going to use 2 different colors. So the green is the left side of the accounting equation, so that would be all of your debits. And then the right side in red are all of your liabilities and owner's equity. So if it's an asset, remember it increases on the debit side. And if it's a liability or an owner's equity, it's going to increase on the credit side. So cash, what would cash be? Remember, an asset is something that you own. So cash is something that we own, so that would be an asset. So since it's an asset, it's going to increase on the debit side. So I would draw an arrow on the debit, which means it's going to decrease as a credit. And then we need to label what side is the normal balance side. Well, the normal balance side is always the side of the account that increases. So since we increase as a debit, I'm going to label NB for normal balance underneath that arrow. Okay, now let's go to accounts receivable. So accounts receivable is also an asset because people are promising to pay us that. So it's like we own it because they're promising to pay us that money. So we're going to increase on the debit side and then decrease as a credit. So that means our normal balance would have to be the debit side. Okay, what about supplies? Is supply something that you own? Yes, it is. So that's also an asset. So every single asset is going to look the exact same way. Okay, next one, prepaid insurance. Insurance is something that you wouldn't think is an asset, but it actually is because you own it and then you can use it whenever you need it. So insurance is going to be an asset as well. Okay, moving on to accounts payable. And if you'll remember, accounts payable is actually a liability because accounts payable is whenever we owe somebody else money. So this company must owe Sawyer Supply some money. They didn't pay in cash, they're going to charge whatever they bought for it. So accounts payable is a liability, which means it's on the right side of the accounting equation, so it would increase as a credit. So I'm going to put an up arrow on the credit side, which means it has to decrease as a debit. So it's opposite of assets. And since it's increasing on the credit side, that's going to be my normal balance side. Same thing with this other accounts payable. This company must owe money to Oceanside Supplies, so it's a liability. And then finally, capital, remember, is our owner's equity account. So since it's on the right side of the accounting equation, owner's equity or capital is going to increase as a credit and decrease as a debit. Okay, also some of y'all were turning in your work togethers. Remember, that's not for a grade, it's just for you to help with your application and also to study. So make sure you're not turning in your work togethers. You want to keep these for your own use. Okay, I'm also going to do a few of the application problems with you as well. So go ahead and make sure you have that out. Make sure you turn to page 52 in your textbook so you can follow along. On the work together, we made T accounts for several different accounts. You're not going to be doing T accounts on the application, but you are going to be listing an account stating what it is. So if it's an asset, liability, or owner's equity, and then you have to state the increase, decrease, and normal balance side of that account. So your work together should help you out a lot with this. They already did cash for you. So cash is an asset. And remember, all assets increase on the left side, which is the debit side. So they drew an arrow on the debit side for the increase, and then for the decrease side it would be a credit. And then the normal balance would be a debit. Your normal balance and increase side always should be the exact same thing. Okay, also, whatever I say is an increase, your decrease side should be opposite. Okay, so since debit was an increase, your decrease has to be opposite as a credit. Alright, let's move on and do another example. So we're going to move on to accounts receivable. Dash Tyler Choi. You could refer back to your work together, or just remember that accounts receivable is an asset because we are going to be receiving the money. So we would own it. And all assets should look the exact same way. So if it's an asset, it should increase as a debit, decrease as a credit, and then the increase side was a debit, so that makes its normal balance a debit as well. Alright, so you're going to go through the rest of those accounts and do the exact same thing, and then make sure you turn this one in for a grade.